Okay.
Hello, traders. It's Wednesday, December 18th. It's time for our live event. So I hope that you're well equipped with lots of questions. We're going to start off with our picks. Last week, I did not have a pick. It's okay to be in cash. Cash is a position. There are times when you should not trade. And that is one of the most important things that a trader can realize. So I'm trying to set a good example. That was a time I felt there wasn't much going on in the market, lots of back and forth chop, compression in a tight range. Nothing was setting up particularly well. It's okay. I did put out a trade on Sunday. It was Marvel, MRVL. Love the D1 chart. Take a look at it in just a second. So the price action heading into Sunday when I did the recording, this is the price action on Friday. I love the gap up. I love the fact that the stock was able to finish strong. You can see it had relative strength all day, lots of volume. Market had pulled back a little bit on Friday, but the stock was able to preserve all of the gains. Monday, the stock moved nicely higher. However, and you could have made money on it if you traded it. However, the point I made was I'm waiting for a dip. This stock has a habit of dipping. It's fairly choppy. I am going to set an M15 HA reversal alert. So that alert triggered yesterday, and I posted it in the chat room, and it triggered right about in this area. We could put up the HA candles. So there's your HA reversal, flat top red, green bottom. Okay, beautiful. The alert didn't cost me a thing. It gave me an opportunity to evaluate what Marvel was doing. I wanted to see half of this gain preserved, which would have been right in this area here. I would have very much wanted to see this low preserved. Pullback was much more severe than I wanted. No trade. So, still like the D1. Take a quick look. And what do I like about it? I like this breakout here. The stock right now still has some profit taking in it, so it's not off to the races. Right now, wouldn't really touch it. Don't see anything I like. I did not like that long red candle off of a relative high. That tells me that there is still some profit taking in it. So, Harry, let's take a look at your pick. I know you had a good one because I liked it.
Google. I picked Google. I was up there with you. I was kind of hesitant to pick one or not, but in the end, Google's chart was just too good to ignore. And you had that nice breakout on December 10th. And then it continued on last week, on Wednesday. It just continued to break out of that compression. And then you get, so when I picked it, it was around 190, 191, I believe. And it's in profit. So at any point, you could take profit. Now, I would probably, if I were you and you were still in that trade, take profit today. And the reason I would take profit today, one, it's not very relatively strong today, right? It seems to have eased off. It's not down. It's up like 5 cents or whatever. So fine, you're still in profit. You're doing well. If you took the trade when I suggested it, you're up $5 a share on it, or your options are doing well. But as everyone knows, today's Fed Day, right? And in 2 hours or so, Powell's going to come out and make their decision as to whether or not to raise or lower rates. What do you think here, Pete, on Fed Day? Because to me, usually we had this era where it was expected for a long time they were going to raise rates. Then it was they're going to cut rates, and a rate cut would the market go up. Is today's potential rate cut priced in? And if they do it, and it's not 100% that they're going to cut rates at 25 basis points today, but if they do, is it priced in so much that we get a sell the news event? Is there anything the Fed can do that you think would make the market pop here?
I don't think that there's anything. There's a 95% chance that they do cut rates 25 basis points. That's kind of priced into the Fed fund futures. And the Fed, after signaling that this is the path forward, is to cut rates. I think that they're going to give the 25 basis point rate cut, but everyone's going to be scrutinizing what they have to say about future rate cuts.
Yep.
And so, we've been talking about what bonds have been doing, and there's a disconnect as far as I'm concerned right now. And I know we mentioned it last week with the Fed lowering interest rates. Why in the hell are bonds selling off? Look at this sell off.
There
This
shouldn't
means
be.
that yields are going higher, not lower. And we can see that on a D1 chart. It's a disconnect. It doesn't make sense. And so what that does is it should at least raise questions for you. It's uncertainty. It's an unsolved mystery right now. And maybe they're seeing inflation. Maybe, rates aren't going to get cut quite as fast as everybody hopes. Something's going on. So I'm not sure that we're going to get a lot of movement today after the announcement, because I don't think they're going to signal what is going to happen in the future. I think they're going to stay flexible and monitor conditions, monitor employment, monitor inflation. We've seen a little kink in the armor for the jobs numbers, lots of revisions lower in previous months. We've also seen an uptick in initial jobless claims. So the job market's softening a little bit. So that should prompt them to cut rates further. But then on the other side, you've got inflation starting to tick higher. See that in CPI, hourly wages. So I think those two forces offset. And plus, they've got this big unknown, which is what the hell is Trump going to do? We know that he's got all three branches, and we know that he's going to be able to execute on his game plan. What impact are tariffs going to have on the economy and all the other things that he's proposing? Maybe better to just wait and see how everything plays out. And they've got the flexibility to cut rates in the future. So that's kind of how I see it. I see kind of a nothing burger in here. What are you seeing?
Yeah, I mean, when you said how bonds are selling off, look, bonds sell off like that in the face of rate cuts or potential rate cuts, usually for two reasons. One, they believe that inflation is going to rear its head again, and they believe that the rate cuts are premature. That is usually reason number one, and that, of course, erodes the purchasing power of fixed income payments. It makes existing bonds less attractive, and so on. And investors sell the bonds, and they drive the yields higher. The other one is that they believe that it might be a signal that there's a loss of confidence from the Fed in the economic conditions. That there's a real fear that economic conditions are going to maybe start going off a cliff. And if that happens, that's why they're prematurely cutting rates now. Because a big argument it's being used is, hey, look at the economy. Yeah, the job, but you have record unemployment, the market's at an all-time high. You get getting decent job creation. By all signs, the economy is doing well. And when the economy is doing well, why cut rates, right? And so there's an argument that they shouldn't cut rates. So a bond sell-off could also indicate that there is a worry that the Fed is seeing some, as you said, you're seeing the softening job market, in other words, and other things. They're seeing some signals that the economy may not be as strong foundationally as it appears. We'll see. I think that you're going to get that cut, but I think it's going to be tempered by probably a slightly more hawkish Fed with Powell during his presser.
Very possible. Technically, if we take a look at the market, what I see here is a situation similar to what we see right here. So this is back toward the end of October. You have this breakout to a new all-time high, but this is a marginal new high, meaning we didn't go way off to the races. We kind of broke out through the high, and then we just kind of sat there and sat there and sat there. Then we got this little dip. I think that's what we've got here. We've got this marginal new high. Market rallies up a little bit, and then we just move sideways, sideways, sideways. I'm looking for this dip. Okay. If I see the dip and it's brief and shallow, then that tells me that it's still all systems go. I can reload and I can buy that dip and look for another new all-time high. This would be a great entry point given the strong uptrend. I would trade it fairly aggressively, but only if I see the dip. If it's more substantial and it comes all the way down to AVWAP-Q, and this horizontal breakout around the 590, 585 level, okay, I need to be a little bit more guarded. Still feel that we'll get a bounce, but maybe not as tall a one. So that's how I would play it. What if we break out? What if we blow through the all-time high into year end? It's going to come on light volume because asset managers are not going to chase. And that is possible, but if we see that, I'm going to be a lot more interested in shorting. There's a high plus trend line that comes into play probably around 617, and that to me would be a buying climax, and I would see my odds of a short-term pullback as being very high. So I would trade that. I wouldn't advocate most of you to trade it, but we don't pick tops, but that would be something I'm watching for.
Couple of questions here to kick us off. Couple of educational questions. One, would I consider turning the wiki into a series of videos? Yeah, I would. It would help people that with learning disabilities would be happy to pay for the videos. I don't need you to pay for the videos, my channel, but I think that would be a good idea. Do portfolio managers use a combination of fundamental and technical analysis? And what about hedge funds? Do they use a mix as well? And market makers use volatility? I mean, look, I've dealt a long time directly with JPM. Pete has worked in the industry for longer than perhaps he cares to admit. And yeah, they use a combination, right? They are most institutions are not short-term trading, right? They have clients that are obviously. I'm a client, I trade a short term. You all saw me trade short term, but most of them are looking at minimum a 6-month horizon, a year-long horizon. They're rebalancing portfolios. And for that, they're doing a lot of fundamental analysis. Now, that doesn't mean they're not using technicals. What it means is they're using fundamental analysis to identify their targets, right? So they're saying, okay, we currently have 15% of the portfolio allocated to NVIDIA, and our fundamental analysis indicates X in 6 months or a year. And let's say that says that means they want to increase it to 20%. Then the technical analysis comes in, right? Then the analysts come in and say, okay, we know we're going to start buying NVIDIA. We know we believe it's going to be at 150 in 6 months based on extensive fundamental analysis. And it's fundamental analysis that they do is well beyond the capabilities of anything a retail trader can do. And Pete and I hammer this home all the time because they have tremendous resources put into that. They have contacts. They can call up people at NVIDIA. They have information that they can use and models that they can put together that you just don't have the access to. And then it becomes technical analysis is used to decide what's a good entry point, right? So we look at NVIDIA right now, and if you were looking to go long in NVIDIA, what you would be doing is seeing yesterday, okay, there's that 100 SMA right there. It's at 128.09. Does it go through that? If it does, we're not buying. We're going to wait for it to dip more, but it bounces off. But now right above, you have 139.79. So you get the slow accumulation, and then what they're going to be waiting to see is it going to break through that last point of resistance and then finally start making its way back to its all-time high of roughly 152.89, 153. So now technical analysis starts coming into it. So fundamental analysis could be used to create the targets or the percentage that they want to balance their portfolios. And then technical analysis starts getting used to identify where their entry points is, where their sell points is, and so on. And that's what we use to start seeing, hey, what are institutions doing? I don't want to get in there. I don't want to anticipate and get in there before the institution, right? I'm willing to give up that burst. Like if I was like, oh, Nvidia, I want to get that bounce. I want to see institutions buy it first. So I'm willing to give up the 5 points today on Nvidia and let them have it first. Then I get comfortable that they're in there, they're buying. Then I can start getting the breadcrumbs off the table, which are plenty.
So I'm going to give you a very good tidbit of information here. When you have fairly light volume and a tight compression like we're seeing right now, this is dominated by program trading. Okay, analysts say that about 70% of all trading is institutional, it's buy and sell programs, it's baskets. Okay, so when you're in this environment, it's probably 90% program. It's probably 95% program because asset managers are not in there actively engaged in this market. And so what you need to tell yourself is, do I want to be trading against the programs? What are my odds of success trading against these programs? So when you say, what do institutional traders do? Well, so that's such a broad spectrum. That could be high frequency trading programs that operate in milliseconds with co-location servers. An institution could also be a huge asset manager, okay, who has a 3-year time perspective. So they do everything. They do everything from technical analysis to fundamental analysis, everything in between, okay? But what we want as traders is we want that longer term money to come to market because that's when price is predictable. Because these guys are a freaking stampede of cattle. When they come in, we know where they're going. There's no question where they're going. And then those programs have a very minimal impact on our trading. And I'll give you a couple of examples. I'll start with one, which was last October when we had this pullback right in here. And then once this was resolved, this breakout, look at how tight that price action was and look at how heavy that volume was. They are in here thick as thieves. Buy, 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 buy. Relentless. Can we predict where this is going? You bet. So if you don't see beautiful, pretty little orderly candles like this, you should be trading less, whatever less means in the context of your trading. But when you see this, you're aggressive and you are adding, adding, adding. I'll give you one more example. One more example.
Good.
One more example, because we're going to go into the stocks. We're going to take a look at Tesla's been making a really good run. And you can see how it's doing kind of the same thing. It's just grind. Whoops, better get into Tesla, TSLA. This is the kind of price action that we want to be trading. So when all of you are asking me to take a look at some choppy bullshit stock today, I'm going to get really pissed off if it's in a trading range. It's getting close to Christmas. Forget that I said that. I'm going to be in a happy mood. This is what you want, folks. Okay, if you don't see this, keep looking. It's not the one. There are 3,000 stocks. Pick the one that looks like this, because that is institutions in there buying with both hands. They can't get enough. And that's why we have the volume. And that's why the programs aren't in there fucking around and messing everything up. It's a steady path higher. Okay.
You have more of the Christmas spirit than I do. I'll get pissed on your behalf.
This is what you want, folks. Well, you already highlighted Tesla, or I already traded Tesla. Now I have to find something else. No, you don't. Freaking ride this pony and ride it hard. That's what you need to be doing because you can predict future price movement, and that's how we get paid.
Just a quick note when you talk about the programming, how good the NLP programming can be. When you ever notice when, for example, the Fed at 11 will release their report, right? So this is a half hour before Powell even comes out and says anything. Or you get these news breaks, and instantaneously the stock is response, right? And within less than a second, you see this huge movement. And you're talking about like these 100-page reports. No fucking way anybody read that in time to make a decision, put those buy or sell orders in. And give an example, when I used to market a movie, for example, and we put a trailer out, we would get instantaneous feedback of all across, whether it was YouTube, Twitter, Facebook, doesn't matter, all the commentary on that trailer, and then it would analyze it and contextually analyze it. So if someone said, this thing is sick, I would know contextually they meant sick in a good way or sick in a bad way, and then get up to the second reports as to the sentiment analysis of that commentary and what they liked and what they didn't like to start making changes or put it in the media by different places. These programs are much more sophisticated than that. And so when these reports come out and you get these news breaks, these programs will kick in, immediately analyze the news break, analyze whether or not it's a good or a bad thing, and their buy and sell programs immediately go active. After that happens, then you start seeing the manual programming come in and someone go, whoa, 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 this thing overreacted by a bit, underreacted, so on. And you start seeing those corrections come in. And that's where you get your volatility. So the first stock I see on a question here, or two of them, is IONQ. That's been a popular pick as of late. It has not great today, but it has a beautiful, look at that chart, Pete. Look at that breakout after consolidation, after breakout, after compression, after breakout. This is IONQ. Today, notwithstanding, is exactly the type of chart you want. And when we talk about buying a dip, again, caution before the 11 o'clock announcement, but this is the type of dip you might want to be looking at. This is just a picture perfect daily chart.
Yeah, beautiful. They can't get enough of it. They can't get enough of it. And that's where this nice, tight, orderly price action comes from. Because the first second that some scared little seller decides to take profits, what does the rest of the money do? They gobble that supply up like there's no tomorrow. You got any more? Because I'll take everything you've got. Well, that's what we want. You get a little dip down here to AVWAP-E. Hello. All right, we bounce off of it. You clear the open of this little red candle right here, and you close above it, and you close above the EMA 8. Thank you very much. Whoosh.
And they also asked about HUT. This falls under, and we'll see a bunch of these in the questions. Just look at that daily chart. It's very simple when you see that pattern. You put an alert on the top part of the compression, 3150. You put an alert on the bottom part of that compression. You wait for one of those alerts to get triggered and you move on. That's all there is to it. When you see a compression like this, you wait for the breakout. You don't play the compression. You don't anticipate the breakout. Right now, HUT, very nice daily chart, similar to IONQ, very similar charts, but again, you just wait for this breakout. I like IONQ a little bit better than HUT, but just place your alerts when you see those compressions.
I agree with your assessment that you like IONQ better. If you draw a line through all of these candle bodies, you'll see that it has an upward bias, but not a great one. You're seeing lots and lots of mixed overlapping candles. That's not what we want to see either. The volume is patchy. Okay, some days are better than others. Lots of red candles peppered in here. You don't see that with IONQ. And you have finite capital. You don't have unlimited capital, so you have to choose. Well, I would choose one that might have overlapping candles, but better pace, better momentum, bigger slope upward. So IONQ looks to be better than what I see in HUT. You also had this nice little lift off here, which tells you that buyers are super excited in here. Look at that volume. Okay, this is a harbinger of big advances in the future. So any dip, you're looking to buy into that. SOUN has been one that we have seen in the chat room a lot, and we've traded, and somebody asked about that. That is ready for liftoff,
Look
and
at that volume. Jeez.
love that baby. And so I think Nvidia might have taken a small equity stake in this company, but anyway, you should always read the news and just find out, well, okay, this thing's super hot and look at that volume. So what's going on? What's got buyers excited? Is this material or is this all fluff? Oh, hey, Nvidia took a position in it. So yeah, maybe this is some great AI. Ooh, it's got AI in the name, Harry. That's all I needed to see.
There it is. AI or quantum. Put one of those two.
Right. So anyway, when you look at a chart like this, the question I always get is, usually I get it right up here, okay, at about $24. Pete, can I buy some right here? Do you still like it? Well, I liked it back here at $7.50, to be quite honest with you. Okay. At $24, I'm a little nervous, but this stock could go to $240 for all I know. So if I like the price action, I don't want to chase, it's kind of going parabolic. What you want to do is wait for it to get close to that EMA 8 in here, and then take a small position. Take a tiny position, minuscule. You're not even thinking twice about it. Oh, hey, it broke out to a new high, long green candle. Okay, I add minuscule, just like here. So now my average cost is still below the current price of the stock. And then I continue on that path over time. Every time the stock confirms its strength, I can add a little bit to the position. And that way you're not freaked out that this thing takes a dump one day and you're left holding the bag. You're just adding, and your average cost is still way below where the stock is currently. So that's how you build a position.
Someone said, come January 1st, are stocks that have run up a lot, like Tesla, PLTR, app, going to get sold off by portfolio managers since they have been high flying? The wealth managers on CNBC seem to suggest that. Well, first off, I'd rather take advice from a meth addicted guidance counselor than listen to analysts on CNBC right off the bat. These people are worse than worthless. Honestly, they're up there with political pundits in terms of predicting what's going to happen. And the trick there is because we're talking about stocks and we're talking about volatility and we're talking about nobody knows anything type idea out there. They're going to be right every now and then, and you get this bias, right? You remember, oh, they were right about Tesla, right? And you totally forget about the other fuckwit predictions that they made that were completely wrong. And the same analyst will one day say the market's high flying, it's going to do this, and then a week later they'll have this article out saying red flags are everywhere, blah blah. All they're doing is whatever will get more views, more clicks, more people sharing and talking about what they're saying, and the more sensational, the better. So, does it sound sensational to say, hey, come the new year, there's going to be this massive sell-off in these high flyers? Yeah, of course, people are going to share that. People are going to talk about that. Could it happen? You know what? It might, and they'll look great. And if it doesn't happen, guaranteed they'll have an excuse or a reason. Well, that didn't happen because this new law that looks like it's going to go into effect staved off the impending sell-off. And so they'll say they were still right, but intervening factors came in to mitigate that. Well, like I said before, these analysts are making buy and sell predictions, these funds, based on 6 months to a year timing. January 1st, they'll be rebalancing, I'm sure, but it's not going to change those predictions. So this mass sell-off they're talking about, just look at previous January 1st. Look at that's why there's history, right? The stock market has history. You have the ability to look at that history with charts. Go back in time, look at the beginning of January. How does the beginning of January typically perform? How does it typically perform in election years and so on? That will give you a better sense of what's going to happen than listening to whatever fuckstick is on CNBC at the moment or whatever article Seeking Alpha says.
I don't even watch CNBC. I haven't watched it in probably 15 years. It is absolutely worthless information. And one of the worst things that's going to happen to you is you're going to hear someone that actually sounds like they know what they're talking about. And in the back of your mind, you're going to be thinking about that. The market is in absolute liftoff mode, but some guy comes on and tells you, yeah, credit, consumer credit's getting kind of lofty in here. And, this is usually a threshold where we start to see some danger. And you're ignoring all of this. And that little voice in the back of your head is telling you, yeah, that guy was an expert. He sounded pretty convincing that consumer credit could be a future problem. Forget all that BS. Price is truth. Just follow price because it tells you what the institutions are doing, not what they are saying. Two completely different things. And by the way, I had mentioned in the chat room today, and one of our members got the right answer. So I was very proud of him. You start looking at price action. Yeah, well, you told me that stacked green candles are really good. And look at this thing stack in here. Man, this is what a nice move this is. Oh, we're in the gap from the previous day. Wow. Yeah, this is the perfect setup. Oh, we got volume too. We got all the ingredients. And then blam, you get blindsided by a move like this, and you start losing faith in price action. Well, there was one key element to today that you had to keep in mind, and that was context. What is the context of this move? The context is we've got the freaking Fed going to make an announcement in the next hour. That's going to be big news. So this is all program generated, and that's why you get these big moves like this. So you can't base your trading on this because at any moment when the programs are active, they can yank the rug right out from underneath you. So if you have really light volume like this, and now you're seeing heavier volume, which is actually a little deceiving because we've got triple witching coming up. So these guys are rolling all their futures positions. They're rolling all their baskets. Okay, this is end of quarter window dressing is coming up as well. So that's actually inflating what the volume is currently. But if you are in a tight little compression on a D1 chart like we are right now, okay, this is no man's land. This is crap. This is BS. And the volume has been light into this. This is when you can expect all that herky-jerky type of program trading. This is what you want, is this nice tight price action in here, because then you've got the wind at your back with big money coming to market, and that negates anything that those programs might possibly be doing. So with Tesla, this is long-term money coming to market on heavy volume with very nice, tight, orderly price action. These guys will not be flushed out. Certainly not easily. You get any kind of little dip in here, guess what they're going to be doing? Hello, IONQ. For some reason, I can't. IONQ. All right, here we go. That is what they're looking to do. They're looking to buy this dip. So when you get price action like this and you're long, you don't have to freak out that, oh, it's falling apart. No, stick with it. A dip is going to give you an opportunity to add to the position. So if Tesla dips, it's going to be gobbled right back up.
I just want to point out to someone who said, Tom Lee from Fundstrat is the only one out there who knows what he's talking about. You cannot discredit him at all. I can't discredit him. Okay. In 2018, Lee predicted Bitcoin would reach 25,000 by the end of that year. You know where Bitcoin was at the end of 2018? 4,000. 2022, he said the S&P 500 would perform strongly and reach 5,100 by the year end. You know what happened? It suffered a steep decline, ending the year lower. He also said in 2021, he downplayed the long-term effects of inflation. That inflation kind of a little bit more persistent. 2022, he said buy tech stocks in 2022. Yeah, well, what happened in 2022? Tech stocks did not perform. So can I discredit him? I think I just did four examples there where he made these huge proclamations. And what didn't he do in a year that it mattered, 2022, where you had this bearish market come into play? He completely missed it. He missed the bear market. So don't come at me with oh well, but this person, you can listen to this person, because you're remembering the times he was right. That's all. You're remembering the times that he came out and he was right. And these people come out with this authority. Trust me, tell me. And you know what happens? You know how many people probably bought Bitcoin in 2022 and then wound up dumping it? And how many people bought into the market at the beginning and then got crushed by a bear market because this guy that everyone thinks is the holy grail came out and told them to? Okay, well, you know what? Is he better than most? Yeah, he probably is better than most. But don't tell me he's infallible and don't say I can't discredit him. I'll fucking discredit anybody.
You know who else was really good? Kathy Wood.
Oh,
Kathy
yeah.
Wood. Kathy Wood. Oh, you remember the people coming in our chat room buying stocks that were $10? Oh, this thing's going to 100. Well, she says 150, but I think 100 is a little more what? Ah, just trade what you
Yeah, I
see.
remember when she was the
Learn how to read
darling.
price action.
All right. Let's see here. AVAV. And by the way, I'm looking at these right as I'm reading your typing here. Looks like a juicy short below all MAs, EMAs, recent pull up getting squashed below weekly lows. Nice gap up in March. If Mr. Market plays ball, looks like a nice short. I tend to agree. I like the drop below the SMA 200 back in December 5th. The only thing I don't like about AVAV is the volume. This thing averages less than 500,000 shares a day. And the problem with that is on most given days, these things are going to follow the technicals, right? And so here you have these drops. Before that, you had this the 100 SMA holding for a while before it finally fell below it. That was probably earnings. But the problem is the moment you get some attention, right? Let's say all of a sudden JPM, Goldman, whatever, starts paying attention to this particular company and says, you know what, we want to accumulate this. It doesn't take much when you have less than 500,000 shares traded a day on average, 445,850 average a day. What you get is one huge buy is going to send this thing soaring. And you'll have this day like, whoa, ABA is up $9 today. What the hell happened? It's because someone came, paid attention, went in and saw something they liked about the company and bought it. And, on a NVIDIA, that's not going to be a problem because there's 400 million shares being traded. But on this, you get a decent 50,000, 100,000 share block buy. It's going to send the stock soaring. Does it look like a good short on the chart? Yes. The volume, I'd be a little bit worried.
Yep, it's a nice short. There's no question. And yeah, Harry makes great valid points. The fact that the stock has been selling off, if you get a market tailwind and if you get that dip that I was mentioning for maybe a 3 or 4, 5 day swing, yeah, this is going to be a nice short because it's already got that downward momentum, but you're trading against the longer term market uptrend. So you've got to be very careful with shorts. I'm contemplating giving you a short trade today not because I'm bearish on the market, but because I kind of want everyone to see both sides of the coin right now. And I've got one that I'm thinking about. So, I feel like right up at this level, if we break out today, things start getting a little fluffy and a little frothy to me because I don't see asset managers just aggressively buying into year end. I don't feel that we have the backdrop to excite them to that level. So I'm a little bit thinking we're going to get a little drop in here, maybe, 5% or so. So
I
that's
actually
why I
kind of
would
have
be
my
looking.
short picked. I might be the same as yours. I don't
Ah,
know.
you got your short pick.
I
All
might
right. Well,
spot. I might go with spot as a short.
ooh,
Um,
I didn't look. CMCO bullish explosion alert. Whoa,
oh
let's
yeah,
see
let me
what we
take a little
got there.
QMCO. Bullish
Well,
explosion. Let's take
that's
a look here.
nice. This is institutional buying. Do you
That's
see
nice.
how steady this price action is? Can't get enough. How many more you got? I don't know this company. I'm only looking at the technicals. But yes,
It's got quantum in the name.
that's what it is. Where's the AI part? It's got to have AI.
Exactly.
Yeah. So,
That actually is a nice bullish explosion.
Yep. And so, how do you trade it? I'm so afraid. What if it retraces? Like I said earlier, tiny. Buy 2 shares. Okay. Tiny. And then when the 2 shares are working out and it's making a new high, buy 2 more. Okay. Tiny position. So your average cost is always lower than the current price. It's the only way you can trade something like this. If you get a decent dip and it finds support and the retracement was small, fine. You can buy a dip, maybe try a little bit bigger size with it. But yeah, that's kind of nice. I'm
A lot of
sorry.
people,
Let me take a look at your short.
yeah, take a look at
Spot was the
spot.
short.
So what I like about spot
Ooh,
here is one, it broke a trend line, right? So if you take the bottom of 1119, connect it to the bottom of 1210, connect that again to 1217. Today it breaks through the bottom of that high low trend line there. You also have this gap, right? So spot obviously gapped up on 1113. The bottom of that gap is 445. It sure looks to me like this wants to try to test that. So that's kind of what I'd be shorting. Obviously it's relatively weak today. Obviously you have this little bit of a sell-off. It breaks compression to the downside. That's where if you were to put your compression alerts upper and lower bounds, you get that alert today. But what I'd be looking at here is this thing going to test 445 to see if it re-enters the gap? And if it does, then you hold that short and ride it all the way down into that gap. You can get a nice $20, $30 gain out of something like that. You also have your upper bound on that trend line, right? So that trend line comes in right around 470. So, that's an $8 stop there on resistance, but you do have that number of 470. You can even use 465.34 as the low of 1210 as your stop. So that brings you a little bit closer. So you have limited damage on the upside because you have your stops in place, your mental stops even. Um, but you have a lot of good downside, particularly if it enters that gap. So I like spot as a short right now, tentative, but that's what I'm leaning towards.
also breaching AVWAP E. I
There you
like
go.
that part of it too. And so mine is a technical and a fundamental short. It's fundamental short because Harry says that their soft drinks suck. So it is CELH,
Disgusting.
Celsius. And you can see this is a very steep downtrend that we've had for quite a while. It has a tiny little bounce that falls well short of the 100-day moving average. The market has been generally flat to higher, and this stock is backing off, which gives us this nice little bearish flag formation. And today it is below AVWAP E. So I've got a lot of reasons for liking that. Go into the price action. That, see that steady drift lower, nice tight price action? That's institutions selling, 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 selling. It can't come up for air because somebody wants to get the hell out of this stock, and the volume is pretty heavy. Could be my pick of the day. I'm going to make it my pick of the day.
And if your car ever
Uh,
runs out of gas, you can use this soft drink to fill up the tank because it fucking tastes like gasoline.
it's EWZ was another one that I noticed. I do like that pattern right there. This is like a
Yeah,
this thing's gonna sell off.
I think
So
it's dying
it's
on the
an
vine.
ETF, but this thing is a nasty chart pattern, and you can see it's gapped down yesterday. They tried to rally it, and then this morning they came in and just whacked it right on the open. Uh,
Yep.
Erased all the gains from yesterday, and pretty relentless selling pressure. So there they try and bounce it today. They open it near the low and then whap. Another one that I looked at that looked good, which kind of ties into the whole bond sell off, is HYG. Little broader implication here. These are longer term, high yielding bonds. And you can see that's a pretty significant little crack down there below the 100-day moving average. Still would need to get below this trend line here. This is a low plus. That is a support level. If it breaches that, then you've got a clean path to the 200-day moving average. And you can see the relative weakness here. So that's another one that you can take a look at. FOMC day. So bonds are obviously going to be very sensitive to what the Fed has to say. So this could be one to watch. If it breaks this level today, you might have a really nice little trading opportunity down to that 200-day moving average.
Megan Foss, we share our trades live in the chat room, in the OneOption chat room, and I also share them on Twitter. But those are the two places you get them, and the entry and exit are always posted. The price is always posted. I post the position size and all of that. So they are all right there. I'm getting a lot of questions about my purchase of Etsy, which obviously is not doing very well, but you see that 200 SMA right there on the daily chart for Etsy. Now, when I bought Etsy, I had a 200 SMA break. I had a break of compression to the upside. So I had two very good bullish indicators. And I also had an upward trend line that started on October 4th and connected to the 31st, and then connected to 12.4, and then connected to 12.5, and so on, like 8 connections. And it broke through that. So I had 3 breaks of resistance when I bought Etsy, all the way up at around 62. And then I had some pretty hard support below it, which is not only that 200 SMA, which is at 59.01, but also a bottom trend line that starts at 12.5. And you can just run that there, and that comes at around 58. So I have 59 and 58 as 2 levels of support. So right now I'm okay holding it. It's above the 200 SMA. It's above that 58 trend line as well. I'm banking on those levels of support holding. But this does not have the relative strength it would need right now to withstand a market drop, right? So that's my only concern with Etsy, which is if the Fed pops the market, drops the market, then Etsy might not be able to withstand that. But at the moment, on the technicals, I'm fine holding.
I'm just going to make a quick technical note. When you see long tails like this and you see long wicks like this and you're flipping through daily charts, well, instantly what that tells you is this stock is choppy intraday. Okay. So this is not your boom, 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 march higher kind of stock. When you see tails, you see wicks, that tells you that you should be a bidder. You should, if you're going to buy, you need to be bidding lower because the stock has a good likelihood of pulling back. When you see these tails and wicks, it also tells you that if you enter the trade, you have got to give the stock some breathing room. Okay. You've got to let it move around because that's what it does. And you should expect that you're going to have a contra move once you enter the position. So just a little technical analysis, a little info you can get from a D1 chart.
Good question here by Kyle Davies. How do I unpoison my mind? I can't see this market as anything but overpriced and a house of cards, yet it keeps going up. Well, one, the most famous adage in all of trading and investing is the market can stay irrational longer than you can stay solvent, right? So, could you be right? Is it overpriced? Yeah, it is actually, looking at the historic PE ratios and everything else. If the market dropped 20% in the next week, every analyst out there would be coming out telling you why, right? And all the reasons they would give exist today, yet none of them are out there saying it's going to happen. But they'd all be Monday morning quarterbacking it with plenty of reasons why that drop was inevitable. And you can also look at the market and say, well, this thing keeps going up, up, up. It's got to stop soon. And if you look, just put on the weekly chart of SPY. And yes, there is some technical justification where you can see, go back as far as you want, go back to March 2023, up, 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 up. And then starting September 2023, you get a correction. Then starting November 2023, all the way up, and then you don't get a correction until April, right? So now you have 5 straight months of bullish activity. Then you get a small correction, up, up, up. Then in July, bam, you get a correction. Now you've gone up again for roughly, I don't know, 5 straight months of an upward trend here without a major correction. Based on the weekly chart, is there probably one coming? Maybe. That 600 price point does need to be checked. The Fed will play into that as well. So there is justification, but justification to be cautious, not to basically say, I'm just going to sit and wait. That's why we're day and swing traders, right? That's why you could say, you know what? NVIDIA is strong today. I'm going to buy it and sell it today or tomorrow. And the Fed, let's just pretend the Fed wasn't a factor today. And you could be in and out without messing with that long-term bias in your head. So that long-term bias should apply if you're thinking, now's the time for me to start investing stocks, and now's the time for me to start buying, right? And then what you have to be able to do is say, I'm looking for that pullback, fine. I'm looking to get better prices, fine. But recognize when it's not coming. That is pretty evident on the 600 price point. If SPY does not break that, if SPY does not check that, if SPY goes to 610 and it looks pretty clear that 600 is not being tested, at a certain point you have to say, okay, these are the prices. This is what's going to happen. I'm going to just start buying at this point. Just have those price points in your mind. You don't get rid of the bias, but you have to have some guidelines, some rules. Right now, long term, yeah, it's good to be cautious. Wait to see if it's checked. Short term, follow the price action. What is the price action telling you right now? It's telling you that it's okay to buy short term, but I would not be comfortable holding something for a month or buying long term options or leaps at the moment. I'd be waiting to see, are we going to check 600?
Did that question have the market is overextended or the market is overvalued?
Overpriced.
Overpriced, which
So
would
overvalued is
be
probably the interpretation.
valued. Okay. The problem with overvalued is that you are assuming that you understand value and that you know
Mhm.
value. That's fundamental analysis. Okay. Let the big boys do that with the research teams. What you need to do is you need to watch price action. Value means nothing. And the sooner that you can throw the concept of fundamental analysis out the window, the better. So if you assume that you know nothing, I'm just going to follow the technicals. Okay, different story. You get a nice big rally like this with a marginal new high and a compression. Okay, well, that tells me that I should probably lighten my swing trades and wait for a dip. That dip is going to provide me with an entry point, and then I can be a little bit more aggressive. So if right now your mind is telling you that the technicals don't line up and that until you get that dip, you're not doing anything, then I would agree with you. I think this is a good point to do nothing. Wait. And if you don't get your setup, it's okay. We break out to a new high. I would need to see follow through on this compression. Typically, compressions like this that are worth uh, chasing are going to happen earlier in a long-term uptrend. Typically, when you get a compression like this after a big run, you're going to get a dip in here. There's something is going to spark a little bit of profit taking, and then you're able to gauge it and then take a position. It's always okay to start small. So if you're afraid that the move has already been big, go tiny, but at least get some points on the board.
How do you deal with? Oh wait, hold on. Today I registered with my independent U.S. broker, which let me invest in U.S. market from India. So can you suggest my first stock? What should I buy for long term? No, yeah, again, you're in the wrong channel. This is day trading. This is swing trading, right? That's a fundamental analysis. You know, what do I have? Yeah, I like Amazon. I like Google, but who cares what I like? Those are good long-term stocks. You know, go buy those stocks and hold them. Buy the index. Buy SPY. If you're a long-term investor, you're not looking to if you're a first-time long-term investor, you're not out there trying to beat the market, right? You want to be the market. So just buy the index funds. Buy the index funds and hold them. Then as you get a better feel, maybe you can start diversifying and buying specific stocks, right? And that allows you to maybe beat the market by a little bit. Only good traders, day traders and swing traders are going to consistently beat the market. As an investor, you're looking to be the market. So there is the difference. And to be them, there's no safer way to be the market than just investing in SPY and QQQ and in all those index funds. So as a first-time investor, you know, that's what I would do. I can't tell you what you should do. I'm just saying what I would do. None of this is like advice to say this is just what you should buy as a long-term investor. All I can do is we're not fundamental analysts. That's what I would do as a first-time investor is, hey, just buy the index funds.
I do have a couple of questions on leaps. The first one is, should I buy Tesla leaps? Okay, as soon as you're buying options that are a year out or more, that's an investment, okay? That requires fundamental analysis. I like Tesla. I would not have a problem salting it away for 3 years, not even looking at it. So the answer personally is yes, I would do it, but you're not me. You've got to do the research. If you aren't comfortable, and you should be lifting up the hood and saying, why do I feel comfortable owning Tesla for the next 2 or 3 years? What do their cars look like? What other technologies do they have? You got to go through all the fundamental research and decide if that makes sense for you. So my opinion means nothing. You're the one who's going to have to hold this stock through a pullback. So do as you will. You know, if you feel that Tesla's going to be good for the next 2 or 3 years, yes, you can buy some leap options on it, but that is an investment. I'm not giving you investment advice. I'm just telling you how I feel about it.
A lot of questions about BA. Look, if tarot cards and Ouija boards came together and had a love child, it would be the BA stock. Fuck that stock. I hate that stock. I can't stand that stock. It is one of the few stocks on my no trade list. Does it look, if you took the name off, you're supposed to take the name off the chart and just look at the chart. If I did that, yeah, Tesla looks great. I mean, BA looks great, right? Nice run up, breaking through every SMA, breaking, not even stopping, just perfect looking, upward trend, orderly, looks great, breaking through every level of resistance, not parabolic, but stepwise, great, except it's BA. And I can't stand that stock. You get burned on the stock time and time again. If you are going to trade BA, you day trade it and you get the hell out the moment it goes against you.
We added a feature for Harry and Option Stalker Pro. It's called Blacklist. So that once you add the symbol to it, it doesn't show up anymore in any searches.
Screw that fucking stock. I hate it just like I hate SMCI, but I hate BA more. It just, what a piece of crap. But hey, if you haven't yet gotten burned by BA, maybe it's a rite of passage. Enjoy.
Well, I think one of your points is really good too, is that Fundamentals drive the stock, and this company is so news driven that you don't know. One time it's like, oh, they just got order for 200 airplanes, with Aer Lingus, and oh, there goes the stock. It looks fantastic. Oh, wait a minute, the door just flew off of one of their planes. Oh, there goes the stock. It's selling off.
Um, for both of us here, Pete, as professional traders, do you have a goal in mind to take X number of trades per day or X% profit per month to live off of? Um, I put this in the wiki. Pete talks about this all the time. In the system, you have to treat it like a business, right? So when you start out, you have your business plan. This is how much I'm starting with. This is how much it's going to cost to invest. And you put everything in the monitors, the subscription fees that you have to pay for things. All that goes into your business. You set up an LLC. You want to write those things off. You certainly want to try to get trader status. All of those things, right? And then you go, okay, this is how much I need to make, right? And by that point, you should have gone through your 2 years of training. You should know what your win rate's going to be. You should know what you can do and accomplish with your starting amount of money. What I like to do is, I have my profit target of what I need to hit every month. I do not want to exceed or go below that profit target by a certain amount of standard deviations. Because let's say arbitrarily your profit target's $5,000 a month, right? Whatever it is. You don't want a month where you made 10,000, and you certainly don't want a month where you lost 5,000, right? You don't want those huge swings. You want a month where you made 6,000, maybe a month you made 4. You want it to average out nicely to what your goal is, right? If you're experiencing too big of swings and you're trading to a radically too big position size, you need to look at your journal. You need to correct that. And then what I set for myself is every 6 months, I take, I have all the profits. You pay yourself every month. You pay out with your profits every month. And then I increase my base amount in my account by 15%. So it's around a 32% increase a year in the base amount. So I continue to every 6 months reinvest, increase the base amount. By doing that, you also increase your profit targets by a proportional amount as well. So your profit targets go up as your base amount goes up, and you do that. You do not increase your base amount if you did not hit profitability. If you're not hitting those targets, you need to readjust the targets or go back to the beginning and start training again to get to the point where you can. But everything has to be treated like in a business.
Yes, and it also has to, your market opinion drives everything. Okay. And so my times of activity are going to coincide with where I see opportunity lining up. And so if I look at a chart like this, it's nice, it's steady, the trend is strong, and I'm going to be a dip buyer. So here I'm not as active. I'm taking gains. I'm watching resistance near this high. I get the dip. This needs to find support. It finds support at the 100-day moving average here. This is where I start getting active. Okay, I like this. I like the fact that we're above this red candle. This is where I'm going to be pretty damn aggressive with my day trades and my overnight swing trades. Okay. Okay, now we're starting to stall out tiny bodied candles. Wait for the next dip. Wait for the next dip. These are the areas where I'm going to be active. This is where I'm going to be taking profits. This is where I'm active. This is where I'm taking profits. So I throttle my activity based on what the market conditions are and where I see the best odds of success. This is all about odds. Every single day is about lining up where your odds are. And when they're good, that's when you strike, and you strike hard. And when they're not good, you sit back and you wait. If you're motivated to do 10 trades a day, there could be shitty trading conditions, and here you are doing 10 shitty trades when you should be doing maybe 1, maybe 2 trades. There could be other times when you're sizing up and you're trading larger size. I don't ever trade 20 positions in a day anymore. I used to do 15 trades a day,
Yeah, I
different
remember that.
stocks. So yeah, I mean, I've done it. I'm not as active now, and actually, now that I'm not trading as much, I'm a hell of a lot more successful. And I make more money now by being patient on these and just taking some swing trades than I would be if I were just in and out of positions. So timing and market conditions are really important. And one of the things that all of you are going to feel the pressure of when you're starting out, once you're seasoned and you're established, it's like, okay, well, I don't have to press as hard. But when you're first starting out, you're trying to work your capital as hard as you possibly can. And you need to put food on the table. And that's when you're really pressing hard. And that's kind of when you're opened up to a lot more mistakes as well. So, to the degree that you can, know that when you're in here, you're kind of opening yourself up to unnecessary risks. Down here is where your odds are higher. And even though you weren't making money here, when you start trading here and sizing up, what you didn't make here, what you didn't lose here, you're going to make up for right here. And so that's just a word of advice. And even when the market's doing this, this helps you identify stocks with relative strength that are ticking higher. So if you were only trading S&P futures, then you'd have to have really good timing. But because we trade stocks, there's a lot more cushion, a lot more margin for error, and there's 4,000 stocks that you can pick from. There's always something that looks good.
Um, Notice I've gone to shares instead of calls or puts. What's the reason behind it? Look, when you can do shares, right? There, you use options for leverage, and if you need to, because your account size, you'd use options. I can have the luxury of buying shares, and shares are like buying deep in the money calls or puts, right? So, getting 1-to-1 on shares. So if you have the ability to buy shares, buy shares. What I do love to do, I like lottos, and there are certain options I'll play. I played Nvidia lottos a week or two ago. Those worked out well. But if you have your preference and you can, then buy shares. But I certainly see why. Look, if you have a $10,000 account, right, or a $15,000 account, and you're like, oh, I want to go long Nvidia here. Maybe you can get, I don't know, 500 shares, 300 shares in Nvidia on a 4 times buying power with a $10,000 account, and Nvidia goes up $2. Okay, you made $600. But if instead you bought Nvidia options, then you can buy, let's see here, you can buy the 132 options for $4, $400, and you can buy 30 of those, and then those go up $2, and then you make a lot more money. So you make $6,000, right? So you make 10 times the amount. So there's the difference. But if you're buying 30 options, right, that's like buying 30,000 shares. And so if I'm gonna do that, then I might as well just buy 30,000 shares if you can. It's much more economical, much easier to do. So there's no bias against the options. It's just whether or not your account is able to buy the shares or not buy the shares. That's all.
Harry has a great win rate, so this is not an issue for him. But for any of you who are considering trading options, you must make sure that you have the 75% or higher win rate for a few months before you even consider options. All options are going to do is they're going to take you out of the game quicker. So you're leveraged. You've got to be not only right, you've got to be super right, and your timing has to be impeccable because you're constantly fighting time premium decay. You can negate that to a degree by buying deep options with lots of time. I did have another question on a leap option on Arch, and it wasn't really a leap because it wasn't farther out. It wasn't a year out in time, but you've got a few months until expiration. So let me see if I can find that question. ACHR. ACHR. Whoops. Take a look at that. And those were April expiration. And yeah, that's a nice looking chart. Okay, so you get a big bearish engulfing candle right here. That's kind of a warning sign, but over time, it's able to recover from that. So it got a little bit of ahead of itself, and now it's breaking out to a new high. That's a really nice position. So you bought the April 7s, and you have a max day till expiration that I like to exit a long call. Well, since you're long an in the money call option, these are going to be trading close to parity. They'll have some time value in it, but your biggest risk for holding that position is time premium decay. So if you were long a $10 call at the money, yes, you might have some concerns as you start getting a month out from expiration. You're going to be more exposed to time decay. But as a holder of a deep in the money call option, you don't have that concern. You're in essence long the stock. So no worries. Just let it keep doing what it's doing. And on a position like that, with your average cost down here, you could even consider adding a little bit to that position on this breakout right here. It looks good to me.
What do I think of Walmart? I think it's near the all-time high. It's in compression. It's in a narrow channel. 96.18, put your alert there. If it breaks 96.18, go long. Here is an advanced play, right? So when I say advanced play, I'm saying this is something to look at for educational purposes. If you look at Melly, right, and people who have followed me know that I played Melly extensively in the past. So Melly has, from going down from its all-time high here, this thing was up at around 2,200, somewhere around there. What was it? 2,161, somewhere around there, right? It has dropped, right? And it has dropped around $400 a share since then. A huge drop on its earnings on November 7th, bounced back up again, and then dropped again. This year, look at that 200 SMA. Earnings drops it, and it hits the 200 SMA to the dollar and bounces off. So earnings cannot break through. Bounces off, goes up. Now you have another dip. Dip. Probably Brazil issues. Pete mentioned the Brazil ETF before. Melly's always had Brazil issues. Drops it again. But now look again. December 16th, December 17th. Today, 3 attempts to try to break the 200 SMA. The 200 SMA is sitting there at 1784.88. It is literally right on the damn thing. What I would do at Melly, I'd wait to see if tomorrow Melly bounces up off the 200 SMA. I would not anticipate the bounce. I would not go long right now. If it bounces off up that 200 SMA, you do not have resistance all the way up until 1980. That is where the 150 SMA actually meet each other. And I've said time and time again, I'm writing an article on this. When two SMAs meet each other, that is like an exponential, like a Richter scale. It completely increases the power and potency of that support and resistance. So you have very strong resistance at 1980, but that is $200 away. So even if tomorrow Melly bounces up $50 and goes to 1883, that shows me that 200 SMA is holding. That is a good time to go long. So keep an alert there. Watch Melly. That is more of an advanced play because certainly the daily chart looks like shit. I certainly do not advocate going long, but I'm watching that 200 SMA closely, and it could present a perfect buy the dip opportunity for an advanced trader.
You also have a low plus trend line. It's what I call a balanced trend line. Starts at July 13, 2022. The end point is April 22nd of 24. You can see the start point, the end point, and the intercept are nicely spaced. Very long-term trend line coincides with the 200-day moving average. Trend lines are support until they are breached violently. So the expectation is that it should be able to bounce off of this support level. Now you just wait and see. Not my cup of tea on Melly, but Harry has some fundamental basis for liking to trade this stock. Technically, I would stay away, but that's just another reason to watch for that bounce right here.
Think talks about back testing. Look, I'm a former statistician. I taught statistics class at universities. You would think I'd be a huge proponent of back testing. I am not a huge proponent of back testing. Forward testing, I am a proponent of. Back testing, one, it super fits your model. Yeah, go back test a simple 3-8 EMA intraday cross. You're going to see a 90 something percent win rate on that. Well, if that was simple, if that were true, then all you would have to do is play the 3-8 cross all day long, ignore everything else, and you're going to get rich. And when people try that, and trust me, they try that, they get burned. They get burned every single time. Back testing is going to always fit the model. It's going to overfit it, and sorry, overfit the model. You do not want to rely on back testing. You want to rely on forward testing. That's why we recommend, hey, you can paper trade, you can do a million other things. You can trade one share to forward test what we're talking about in relative strength, right? You see something that has relative strength, you see it meets all the criteria, the market, everything we talk about, you buy one share and you trade it when it hits your support resistance levels. You trade it as we recommend you trade it, and then you keep a journal of it. And at the end of a month, you look and say, wow, 80% of those trades made money. Then you can start getting that confidence that, okay, this works. That is forward testing your model. That is what I recommend you do. I do not recommend you rely on back testing these overfit models.
I have a question from Matt Copas. It's a good question. Hey, Harry and Pete, any advice on setting profit levels for your day trading? I have a full-time job and it's hard to look at charts throughout the day. I would encourage you not to day trade. Okay, there are just too many variables. If you're going to day trade, it's got to be a full-time commitment, uh, especially if you are called into meetings, you can't watch things taking place. You're kind of half in the game and you're half out of the game, and it's not a full commitment to it. Uh, Conditions change so much. I can't imagine trying to day trade with a full time job. I have a full time job, which requires tech support and a whole host of other things, and it's really difficult when you've got distractions. You're going to be frustrated with your performance because you're going to take gains prematurely, you're going to miss moves, you're going to get blindsided by something that happened. Try to lengthen your holding period instead of using M5 charts and day trading. Try and do some swing trading where you've got a holding period that is maybe 2, 3, 4 days long. And that way you're not going to be as frustrated trying to force a round peg into a square hole. You know, you've got the time, you can do some evaluation, you're not worried about the intraday wiggles and jiggles. That would be my advice to you.
Given my history in the entertainment industry, do I have any thoughts or insight on the recent move in WBD? Well, I've had some dealings with David Zaslav, not many. He came in as I was leaving the industry, but I've had some. Uh, Here's the problem with him. Now, I assume you're asking that because the stock's at a low point. Is it a good time to buy it, and so on? The answer for me would be no. This is someone, many people come in the entertainment industry thinking, oh, this is, it's obviously a business. I'm going to treat it like a business. I'm going to cut here. I'm going to shelve this movie there. And a discovery that he ran that kind of worked, right? But when you get into running a studio, you quickly find out, or as he is finding out, that talent actually runs the show. Franchises run the show, but talent run the franchises. And when you piss off talent, you begin to lose that, right? You're not able to produce the type of movies that will draw in audiences anymore. And so when you take a movie that seemingly people don't care about, let's say like Catwoman or something, movie's done, it's finished. And then he goes, you know what? I'm just going to shelve this. It's never going to see the light of day and take the tax write off because that's the better business decision. Putting this out and marketing it would have lost me money. Everybody who worked on that damn movie then goes around and says, hey, do not work with them. Do not work with Zafflet. Do not work with this studio. That gets up to the Christopher Nolans of the world. That gets up to the Robert Downey Jr.'s of the world. And then they all of a sudden either don't work with them or demand these huge, enormous contracts to do so. He's finding out that when you piss off talent in the entertainment industry, it doesn't work out well for you. Can Warner Brothers recover? Certainly they can. I wouldn't bank on it right now. And I certainly technically or fundamentally look at WBD and say this is a decent long-term investment. The stock is kind of stuck, all right, and you don't have much upside in it. Yeah, sure, it was down at 7 and now it's at 11, but not one for me, either fundamentally or technically.
Technically, look at that long-term chart. This is a steady downtrend. I don't need to know why. I just need to follow the technicals. It could be that movies in general, the whole space is changing, and people are finding different ways to watch movies. You get this big gap up, okay? Look at the nice rally on that news and look at how steadily this candle has been given back. And now we are into the gap and we are below the open of that long green candle right there. If I were remotely thinking about buying this stock, I would have needed to see better price action here, and that open would have needed to be preserved. So this to me says, no, 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 don't bother.
All right, we've done a lot here. I said my pick is probably, I'm going to stay with it. It's going to, I caveat this, as I'm sure Pete would. I'm going to wait until I see what the Fed is doing. I'm going to, certainly if the Fed comes out, cuts rates, or Powell is dovish in his speech, and the market responds, and all of a sudden spies at 610, I don't advocate taking that short spot then. But assuming the market basically goes nowhere, it might pop up, it might go down, but at the end it doesn't do much, or it drops, then spot short, particularly on a drop in the market, spot short becomes my pick of the week.
Yep, and I'm gonna stay with CELH. I think that stock's got a nice little head of steam. I'd mentioned a couple of others. I think HYG sets up pretty well too. This is technically weak stock, and you've got on CELH, you've got that bearish flag formation that I'd mentioned right there. There's your upward sloping trend line. There's your breach of AVWAP-E. So I think it's got a clean path, probably down to this $25 level, which on a $28 stock is very nice. Also, if I get that little market dip that I'm looking for, it could get there a little bit faster. And if the market rallies, the stock has already shown me that it has resistance, it has sellers. So I don't have to worry too much about the stock lifting off since it's in a downward sloping trend line like that. So I feel like the risk reward of this looks pretty decent. And yes, for sure, trading the Fed. We have talked about this a bunch of times. Let the news come out. There's a press conference. This is their last statement of the year. Everybody's going to be dissecting that statement and looking for one word changes that might have an implication for 2025. I generally think this is going to kind of be a nothing burger event. I don't know. I just don't see a lot that they're going to be able to tell us outside of, we're going to wait and see. We're going to evaluate current conditions. Oh,
Yeah.
okay. Well, makes sense.
Our job as a Fed is to maintain price stability and maximum employment.
Yes.
And they parsed that one word. Last time you said most likely. This time you just said likely.
Yeah, so I am going to be doing a 2025 first quarter forecast. I'm going to try to the extent that I can predict anything. I'm going to just tell you what different influences I'm going to be looking at. I'm going to release that video on Sunday. Next week, we'll all be celebrating Christmas. So from Harry and I, Merry Christmas, Happy Hanukkah. And we still are deciding if we're going to do a January 30 or a December 31st Tuesday live event. We'll have to see. I suggested that Harry and I maybe have a cocktail when we're doing it.
You may not be as sober as normal, but we'll see.
Trade well, everybody. We will see you maybe on December 31st. Have a great holiday.
Yep. Happy holidays. Merry Christmas. Bye, everyone.